Hi, so welcome to Today in DeFi. Today we're going to talk about some stablecoins overview. We're going to talk about their market caps and maybe some interesting facts about the on-chain data that we are reading today. So today's February 3rd. On-chain data stated that stablecoin market caps are on their all-time highs. If we can see from DeFi Llama, you can see that the growth that we're experiencing this last few months has been quite great and exponential, which also translates to the crypto market having a euphoric bull run this last 2 to 3 months. So the biggest change for this month would be the USDC. So we can see here a 60-day market cap change for USDC experiences a very exponential peak in this cycle, where we can see USDT peaks on around December. However, their market cap change hasn't been that significant in the last 1 to 2 months. So what have been driving this price movement from 93 to the all-time high of around 109K is mainly because of the USDC mint. So this is could be some catalyst to also note about. Yeah, and stablecoin supply has still been dominated by stablecoins that are backed by fiat. So we can see here that fiat still has a majority share in stablecoin supply, which also translates that people are actively moving their fiat money to the blockchain system, which also translates into a good catalyst. Most of the stablecoins are still denominated on the Tron chain, which is TRX. However, uh, the Binance chain has been gaining some momentum and share here on stablecoin addresses that are in the chain. So overall, the stablecoin markets has been really great, and this might serve as a catalyst to the whole crypto market, especially Bitcoin. And we're going to do some chain comparison between Ethereum and Solana. Maybe we can do Binance. However, there's not much activity going on Binance, so we'll not include Binance for now. We're gonna focus on Ethereum and Solana first. So we can see here there has been a stagnant trend on Solana, and it's decreasing. It's been decreasing in value on daily active addresses, which also translates to the price falling into around below 200 today. However, we see Ethereum being more stagnant than Solana actually. However, the drop has been greater in price for Ethereum, where Solana still gains traction from this. Daily transactions in Solana has been relatively stable, and for Ethereum, still stagnant on a sideways trend. Now we can see here the stablecoin supply on Ethereum has been increasing a lot. However, the trend for Solana has been way better than Ethereum. So this could translate into a catalyst as well for Solana, where usually stablecoins are actually more active on Ethereum. However, this gain in market share in Solana lately maybe has been because of the Trump the Trump meme coin launch at the Solana ecosystem. So this could be the cause of the increase in stablecoin supply in the Solana chain. There's nothing much to see on the stablecoin transfer volume. However, the TVLs, we can see Solana having a better trend when compared to Ethereum. Yeah, there's not much has been going on lately in Ethereum, and this also sadly also translated to the price as well. It's not doing so great this cycle, and we can see Solana beating Ethereum quite significantly. DEX's volume on Solana has been gaining way more traction than Ethereum. Uh, Again, this could be because of the Trump meme coin ecosystem thing, because the pump is on January 18th, which is the date where the Trump coin is actually listed in Solana. But however, the DEX's volume still remains higher in Solana when compared to Ethereum per February 2nd. Revenues, still Solana is better, and also the fees generated as well. Yeah, so the 3-month change in daily active addresses has been more significant in Ethereum rather than in Solana rather than Ethereum. However, daily transactions has also been better in Solana as well. Alright, so now we're going to talk about some layer 2. We can see some interesting facts about the daily transactions in base chain ecosystem. It's been getting better trends when compared to Arbitrum and Optimism. And for stablecoin supplies, it's relatively flat, but it's been declining for Arbitrum. This is not so great for Arbitrum, to be frank. It's way better than Arbitrum. Base is way better than Arbitrum, and we can see Optimism having way less TVL than both, and also by trend. So I think Optimism is not a very interesting chain to look at when from the stablecoin supply side. So, and stablecoin transfer volumes has been really great on base, where it's been flat on Arbitrum and Optimism. So I think base chain is really gaining traction for DeFi activity in this cycle. Might be interesting to look at. TVL, base has lost in TVL. However, it still remains the highest TVL, around 2.9 billion when compared to Arbitrum and Optimism in the layer 2 ecosystem. Fees generated is also better. So yeah, base remains supreme in the layer 2 ecosystem. Now we're gonna talk about some ZK chains and see where this ecosystem is going and updates. So daily transactions in the chain has been relatively flat and declining on the scroll ecosystem, where we wouldn't recommend doing activity on Starknet because it's been really going flat and the lowest when comparing to the other ZK chains. So this might not be a good catalyst for the token and the chain as well. TVLs, everything is decreasing in value except for ZK Sync. I think this might be because of the Ignite program that they launched this last month, and we can see here on chain that it has gained a lot of attention and interest from the market. So this is a good catalyst for ZK Sync era. Revenues and fees have remained flat, nothing to look here. And yeah, and lastly, we're going to talk about layer ones, and let's just get quick into it. And I think Aptos is really getting a lot of daily active addresses in terms of trend, and also in the daily transactions as well. It's way better than Near and Sui in terms of daily active addresses and transactions. And for TDL, everything remains flat. And yeah, and the fees as well. So there's nothing much to look here. So I think that's it for this week's on-chain analysis.